there is serious disenchantment amongst foreign institutional investors when it comes to Coal India and how they're treating minority shareholders. It's public information that TCI Fund has initiated legal proceedings against Coal India. So more on that, or to discuss that issue, we are now joined by Chris Horn, Chief Investment Officer of TCI Fund. Chris, good morning. Thank you for joining us. Chris, now it's public information that you have initiated a legal action against Coal India. So what are the major issues that will be taken up?
The key issues that we will be litigating the board of Coal India for are pricing coal at 70% discounts to market prices in breach of the fiduciary duties, which are to maximize value for shareholders. In addition, we are concerned that the company is going to try to sign fuel supply agreements which commit volumes at below market levels, and will give the company penalties in the event that they don't meet these volume agreements. So those are there are other issues which we think are very important that may involve part of the litigation: failure to implement washing of the coal, which is a legal requirement above 1,000 kilometers. In addition, we also believe that there is massive theft of coal happening in the company that the board is doing nothing at all to correct. So theft by contractors and who are used to outsource production for a large proportion of the coal.
Chris, hi, morning. You've said that FSAs with private power producers is prejudicial to the public interest and oppressive to shareholders as well. What are the major reservations that TCI has against FSAs?
Yeah, in principle, we don't have a problem with FSAs if they're negotiated on an arm's length basis, which means pricing at full market prices, not at 70% discounts, and any penalties for failing to meet volumes are on an arm's length basis. So, given that there is a massive excess demand for coal, there is really no reason for the company to commit to these unless they in fact get a premium to market prices. Because there is a huge excess demand for coal, and the next best alternative is for customers who need coal to go and buy it in overseas at probably landed prices of $70 to $80 a ton versus the $20 that Coal India is selling, which is, frankly, it's a gigantic loss to shareholders. So, bottom line is that the company, like all companies, should be run for shareholders without being abused by the government for the benefit of a few politically connected industrial companies who are causing the company to earn far less profits than it should do, and damaging the ownership stake's value, which is ultimately it belongs to the people of India.
Chris, another concern TCI has raised is the parity difference between domestic selling prices versus international rates. So what, to your mind, is the loss country is facing as a result of low selling prices of coal?
Yeah, the maths is very simple. The loss is over $20 billion a year, which is being lost to the company, which, since the company is owned 90% by the Indian government, is a pure loss. We would view it as a theft of the national asset that belongs to the Indian people. Coal India is producing over 400 million tons of coal a year, and the vast bulk of that, so around that amount, is being sold at discounts of 70% to market prices, or around $20 a ton sale prices, close to the cash cost of the company. And the market prices in our estimates are landed in India about $70 a ton for their calorific value of fuel. So the difference between the $70 a ton market price and the $20 they're selling is $50 a ton. Multiplied by 400 million tons is $20 billion a year. It's a gigantic number that represents the theft of a national asset from the Indian people. It's a scandal on a monumental scale, and this amount of money should be being used to help the people of India. It could be targeted by the government in any way it sees fit.
John, or rather Chris, since you have taken the legal advice on the issue, tell us whether it is mandatory for Coal India to abide by the government directives, and is the company board free then to take their own calls even if it is against the government directive?
Yeah, we believe they are, for the following legal reason, and this is what we've taken legal advice on. The government is going to try to say that it's in the public interest and force their actions on the desired actions on the company. However, public interest is something that legally the board of Coal India must define, and ultimately the courts will arbitrate on whose version of public interest is correct. So our argument is how can it be in the public interest to deprive the Indian people of $20 billion a year of lost profits for the benefit of a handful of wealthy industrialists who are benefiting from a non-economic government policy to subsidize them. And it can't be. And how can it be just in the same way in the public interest to give away coal blocks for virtually free? No, it can't be.